the real-time real estate segment today, being brought to you by the area trusted real estate professionals of Ron Siegel Radio. rsrmoney.com, rsrmoney.com. Go there and get the information about your property. Again, I talk about the real estate professionals, and I was just doing a speaking engagement last week, and I've talked about this for years and years about having your household board of directors, and that is the real estate professionals. That is the lender, liability advisor, that would be us, the financial planners, the estate planners. You've got the whole group. If you don't have them, give me a call at 800-306-1990. Be more than happy to put you in touch. I ask people frequently when we're consulting with them, do you rate on a scale of 1 to 10? 7's a cop-out, so you can't use 7. So on a scale of 1 to 10, tell me about, trying to find the list of everyone that's on there. But tell me about your financial advisor, your insurance advisor, your estate attorney, your real estate advisor, your liability advisor, your tax person. 1 to 10, 4 is a cop-out. You can't give me that. If you don't have 9s and 10s under all of them, well, that's where we come in, and we like to help out with that because we do know 9s and 10s in every one of those areas. So if you don't have that, give us a call again, 800-306-1990. We're happy to get you in touch with some of these professionals who can actually maybe make you some money, save you some money. I'm a big believer that good advice doesn't cost you anything. It's, in fact, in most instances, it saves you a whole lot of money or makes you a lot of money. So I just want to throw that out there to you. Again, give me a call on that. Why moving to a smaller home after retirement makes life easier? Retirement is a lifetime. It's a time for relaxation, adventure, and enjoying the things you love. As you imagine this exciting new chapter in your life, it's important to think about whether your current home fits your needs. If it's too big, too costly, or just not convenient anymore, downsizing might help you make the most of your retirement years. To find out if a smaller, more manageable home might be the perfect fit for your new lifestyle, ask yourself these questions. Do the original reasons I bought my current house still stand, or do I have needs that changed since then? Do I really need and want the space I have right now, or could somewhere smaller be a better fit? What are my housing expenses right now, and how much do I want to try and save by downsizing? If you answered yes to any of these, consider the benefits that come with downsizing. There are many reasons why you should downsize. Here are just a few from Bankrate. Financial savings. Older adults with higher medical insurance costs might benefit from saving on these expenses like utility bills. Less maintenance if you're tired of housework. Why not move to a smaller home with easier upkeep? Simplicity. Downsizing cuts clutter and helps you focus on what matters. Health concerns. Many seniors downsize for fewer stairs and easier access to hospitals, and transportation. You're seeing that as a chart right there on our screen if you're watching us on RonSiegelRadio.tv, any of the socials of the ABC News and Talk, AM 1490, FM 98.1 video feeds. Your equity can help make downsizing possible. Those perks sound like something you'd want. You may already have what you need to make it happen. A recent article from Seniors Guide shares, quote, and at a time when homeowners age 62 and older have more than $12 trillion in home equity, downsizing makes sense, unquote. If you've been in your house for a while, odds are you're one of those homeowners who's built up a considerable amount of equity, and that equity is something you can use to help you buy a home that better fits your needs today. Greg McBride, Chief Financial Analyst at Bankrate, explains, quote, downsizing can mean taking that equity when the home is sold and using it to pay cash or make a large down payment on a lower priced home, reducing your monthly living expenses, unquote. When you're ready to use all that equity to fuel your next move, your real estate agent will be your guide through every step of the process. That includes setting the right price for your current house when you sell, finding the home that fits your evolving needs, and understanding what you can afford at today's mortgage rate. Bottom line, starting your retirement journey, think about downsizing. I call it right sizing. It could really help. And when you're ready, give me a call at 800-306-1990, 800-306-1990. One of the issues that I talk about with regard to this has to do with the concept of, something, maybe the reverse mortgage is right for you. I know one of the myths of the reverse mortgage is the concept of purchasing a property. Yes, you can buy a house with a reverse mortgage and maybe even get a little nicer lifestyle. Think about this concept. Then we're going to get into the workshop in just a bit. But the concept here is you've got a house, you've been making payments for decades. Maybe you don't even have a mortgage on it. Now, I'll be the first to tell you, leading a lending team, we don't lend money to people who need money, for the most part. We lend money to people who want money. Big, big difference. So you need to make sure you've gotten that taken care of in advance. What does that mean? Well, if you don't qualify, you're too young for a reverse mortgage maybe, and you've retired, if you didn't take care of getting your house in order financially, liability-wise, could be a problem. But let's talk about our seniors. Got a house, you've been making those payments for years and years. Let's just say it's in Orange County and you've got $800,000 in equity. A lot of equity right there. And you say, okay, I want to go out to the desert. I want to buy a house for $500,000. Well, think about this concept. I don't know what your numbers are. We'd have to figure that out for you. But maybe you want to buy it, let's say $600,000. Makes the numbers easy. You go out there and you look and you say, okay, I found the price for property for $600,000. I just cashed out $800,000 in equity. What if I take and I put $300,000 down, get a reverse mortgage, not have a payment for the rest of my life? No payments the rest of my life. And I have $500,000 to do something with because I sold that house that I've been making payments on for years. It's in addition to your savings that you already saved for retirement. What do you do with that? Well, you give it to a financial advisor who understands some of these philosophies. Again, if you don't have one, we'll put you in touch. But think about that concept, because now what you're thinking, we're saying is that $500,000, if, and I only say if we can get that return at 8%, which I know many, many ways to do that, you're talking $40,000 a year. Now, most of the time now, used to be you say 4%, now I say like 5%. You take 5% of whatever that if you're holding, your principal balance is, and take that as a distribution each year. So of that 500,000, you're going to take, say, 2,000 a month, 24,000 a year. You're not going to dip into that principal ever because you're going to be building over and over again. So you've got a better lifestyle because you're taking whatever your existing retirement fund is. Maybe you're taking Social Security. Maybe you're waiting to take Social Security because you don't need it right now. Maybe you've got money in the 401k. Maybe you've got other assets. But now you add another $2,000 a month to it. It's just a plan.